Good morning, everybody. So what prompted this demo was we've been getting just a flurry of activity. We posted some brand new videos of several of our kind of favorite Syscon tools that we use, in particular that are dealing with the financial side of the business and the financial side of your jobs and how they interact with your office, your back office in the field, and how they interact. And based on that, rather than answering many people's questions independently, we decided to do just a quick little demo of the 4 key programs that we released recently. There are 4 programs. I will do a very quick overview of each one, just kind of walk through it, the general concepts, show it how it works real time, live. This is all real demo with live data. And I will then answer questions. I would say, please, just to reiterate what Brian said, if you could wait to ask questions verbally till after the presentation, but if a question comes to your mind while you're watching, go ahead and type it and submit it, and then we'll respond to those at the end. So let me get started here. So the first program that we're going to tackle is what we call our Simple Waiver Generator. And the reason we call it our Simple Waiver Generator is it's just simply that. It is very simple. The whole point of this program is to generate waiver requests quickly from your Sage 100 database. It's just a common thing that causes people great grief in terms of trying to get their payouts, excuse me, and get the waivers prepared properly. Usually we're dealing with Chicago Title and Trust. However, this program has the capability to have us add any kinds of forms that we want, and we've done that for people. So if I just kind of walk through this for you, what you're looking at is the main screen. It's a program that sits on your desktop as a little icon, but it talks directly to Sage. So you would select the Sage database that you want to run. Then you would look at your Sage database and select the job. In this case, we'll take the Wood Elementary School. You can select an existing waiver that's already been created, or you can create a new one. In this case, I'm going to select an existing waiver. The affine information may be modified. And this is remembered job by job. So all this information is captured in a database. And so you don't have to remember it for every job that you have. And then I simply go and edit my waivers. So I'm on this 3rd waiver. And the first thing I'll generally do is confirm that I have all the vendors that I'm going to include on this payout enlisted. If not, I can just click the vendor list, and it reaches into my Sage database and allows me to select additional vendors if I would like to. There are some additional options to take all materials from fully paid stock, the standard things that you're used to seeing. The next step is simply to enter the payout for this, the total amount of the payout. So we'll say we're going to do $50,000 in this particular case. Now what's going to happen here is it's going to automatically maintain a balanced distribution of the dollars based on who you're paying what. So in this particular case, we're going to give $5,000 to Peterson, and it's automatically reducing what's left to come to us directly as we enter it into our payouts. Excavating will put $25,000 to them, and that will be sufficient for what we're doing. Once we're done with that, we'll double check the date that we want to put on this, and we'll go with 05/31. 18, okay, and update the day down here. So we'll say the 31st, and we'll say in whatever format you want it, and then we'll preview it. And there it is. Whoops, let's try that again. Let's try not to close it. And here's the waiver, lien to date. It does know the difference between if you're doing the final payout or not, and the language on the form will change depending on what waiver request this is. Has all the information, and you simply print it, and you are done, and you are ready to move on to the next waiver. And you can just say new, and it automatically advances everything and assumes the payout is the total amount for the final one, but it's not. We have the amount paid, so we can just adjust that. We'll say this next one's $100,000, and we're off and running. So That is the waiver program. Very simple, very practical. It was driven, this program's been around, we've had it for a long time. It just is very useful. All right, waiver program is complete. Now the next three programs require a little bit of introduction here. These three programs are really intended to target your profitability on your jobs. And basically what we're looking to do is smooth out the variations that you have in your income statement, either on the job or on your overall income statement, because you're getting fluctuating information from the jobs. So you're going to be overbilled some months, you're going to be underbilled. If the job is progressing well, you might be at a higher profit percentage than you were expected initially. If the job is going poorly, you want to know that because things aren't happening as quickly as they should when you're comparing the field to the costs received in the office. And all these programs that we're going to look at, this next suite of three programs, address this. I'm going to actually do this kind of in backwards order. The first program I'm going to address is where everything meets the road, the rubber meets the road. And this is what we call our over-under billing. It is often called WIP or something like that. And this program is a little bit different from the waiver program. This is much more interactive with the database. So what we're going to do here is we have simply selected our database already, and I can see that I'm running sample company up here. And I just select the fiscal year that I want to analyze and my accounting period. You can do it for a quarter, a single period. You can do it a whole year if you just do this once a year. And I'm going to refresh my data, and it goes into Sage and reads a huge amount of data about every job. So this grid gives me a little bit of an idea, but this is not actually how we interact with the data, because when we interact with the data, a much more familiar, comfortable place to be is Excel. So we take advantage of that. So we're going to export all this to Excel, and we're going to select a template to begin with. The templates have different capabilities for interacting with the database or interacting with the data that's been extracted from Sage. And I'm going to begin with just a basic over-under billing analysis. And this is a common one that's used, not super sophisticated from an accounting perspective, but it gives you all the key information about the jobs. So I'm going to select which template I'd want. And then I'm going to select a name. We'll just call this test demo. And this will be the file that has been exported to me. It's now opening the template. It is telling me that my T&M analysis is not in the template. It doesn't have that. This program does a whole WIP analysis of your T&M jobs if you use Sage T&M billing. And we will continue. And we will now view the resulting data, which is going to pop up on a different screen. So I have to drag it over. And here we go. All right. So there's some logic to what you see here. What the white columns are data that come directly from Sage. So there's a lot of information that you would normally pull: contract amount with the approved change orders, your budget with approved change orders, job cost to date, your estimated cost to complete, which would be your job costs minus the cost to date, your budget minus your cost to date, just like you would see on the over-under billing report from Sage. However, the yellow columns indicate where we can interact with the data and actually make changes that will then affect our income statement for that job and for the general ledger. So I'm going to be able to go through and make modifications in these yellow columns, and the green columns are the adjusted values. So my over-under billing to start with is we are overbilled by $121,000. So now we'll just quickly go down and make some adjustments depending on what the situation is. So I don't care about historical job costs, so I'm going to just turn that off completely. And then we'll look at, say, the Williams Post Office. And we have, say, some costs that have been put into the job that we fully expect to get a change order, but nothing has been submitted, nothing's been approved. And so, but we're confident that will be included in our contract, which affects our profitability. So we're going to make an allowance for that. You don't have to do it, but it is a good thing to keep your information accurate. Then that has already modified our over/under billing total for that job by allowing for that money that we've already spent and expect a change order on. I will bypass the accrued labor. That's a little bit more beyond the scope of what we're looking at here. And then we get to our cost to complete. So this is a key element, and it's an art unto itself, but you would approach, obviously, your project manager or someone that knows the job well and say, okay, you're about 80% complete with this job according to the cost we've absorbed in the office. And so where are you really? When you go out in the field and you look at where you're at, what is left to do on this job? And so the project manager may look at it and say, hey, I need a crew for 6 weeks. I need a crane. I have a little bit of materials left to go. I have a subcontractor that I'm going to still pay 10 grand. I'm going to say it's going to cost us $50,000 to finish that. Well, that is less than what we had originally planned. So we are now, instead of being 79% complete with this job, we're 88% complete. That means that instead of being underbilled, we're overbilled by $47,000. A major difference in our profitability for that month and for that job. It gives me a much better idea where we are in the job. So I'll go through the rest of the jobs. Typically, you'll walk through, and there's special cases like here's a project that has no contract at all. So it's probably like a T&M job or something that you didn't take the time to do a contract. So what I'm going to do is I'm going to just say, well, I know that I'm going to bill $7,800 for that job. And then that will show me that I've got money coming in on that job for my financials. When I'm done, I just save it. I'll close it down. And now I can actually push this back into Sage. So I'm going to create the journal entry that's associated with this particular analysis. And I always have my spreadsheet as a schedule of values to give to anybody for backup if they need to see that for this particular journal entry. So here's our test demo. This is the spreadsheet that we just created and modified. I'm going to open that. I'm going to post it to period 6 because, of course, I did accounting periods 1 to 6. So I'm doing this mid-year. And it's going to open the data. It's going to open the Excel spreadsheet again, which takes a minute. And it's going to create a recurring transaction in Sage. So that makes this very simple. I can minimize this because I'm kind of done with it for the month. I go into my Sage, look at my recurring journal transactions, which, if you're not familiar with them, are essentially journal transactions that have not been posted. So they're completely ready to be posted. They just require a review and then posting. So I look at this and I say, okay, well, this should be posted to period 6. So I'm in period 6. That looks good. I check this all out. The net adjustment to my income statement is going to be $43,785.31, and I simply save it. We call it, and if I want to make any changes, and I will post it. And I'm actually done with my over/under analysis and applied it to my income statement. Now, I want to automatically reverse that the next period so I can start this process over again from a clean slate. So it automatically creates a reversing entry that can then subsequently be posted to period 7. So I end up with a 0 over/under billing in my income statement, and we're ready to go. And that is done. We are done with our over/under billing for period 6. So moving on to the next one, we mentioned when I was looking at that, let me back up a little bit. I'm sorry. I showed you a pretty basic example. There are much more sophisticated examples that can be done with this. So let me show you. I won't spend a lot of time on this, but this is the exact same program, but a much more sophisticated template to engage with the data. So it's exactly the same information, but notice the white columns have considerably more information. In this case, I have like the original budget, approved budget changes. I have my contract amount, approved contract amount, my open contract amounts. I have billing life to date. I have year-to-date revenue, which is not just the billing, but the actual recognized revenue after over/under billing has been applied. This is important if you have audited financial statements or something like that. And then I have multiple ways to engage with the data. I can override the job to life to date revenue. I can anticipated additional billing not in the contract. So all my yellow columns I can interact with. I can still include unposted labor. And here for my estimated percent complete or estimated cost to complete, if you recall, for the test job we had on the simple template, we had 180 job 186. We had $50,000 as our estimated cost to complete, which gave us an 89.4% completion. Or we can just go in and say to the project manager, how done are you? Well, we're about 90% done with that job. And you get the same sort of calculation. So there's a lot more data, a lot better ways to interact with it, including a deep dive into the budget by labor, material, other, percent complete by labor, material, other, etc. So this can take care of many, many situations, and many clients, we actually create custom templates for their particular needs. So moving on to that magic cost to complete number, that is another program that we have that people use. And what the idea of the cost to complete is that magic number that we're dropping into the WIP. Whoops, I think I just started it twice. Let me kill that. Hang on a second. Okay. The magic number that we're entering for that cost to complete, actually, it's an art to come up with that number. Most people do that with a spreadsheet for a job. So our cost to complete program does that for us. We'll fully integrate with Sage. So I'll go in and I'll select the job that I'm interested in. I'll select the accounting fiscal year and the month that I'm interested in grabbing. And very similar to the WIP program is I can now export that job to Excel. I can pick one of any of the standard templates, or I might have one that was specifically written for my needs. And I will just select it. And I'll put it somewhere. So let me put it in a location that I can find it again. I'll put it on my desktop. And we'll just call this CCMP test. And it's going to open this guy up, populate it for me. And we'll have to move it over from the screen that it popped up on. And this is the deep dive into the job to see exactly what I want to do to get my cost to complete. And in this case, I'm going to walk through this information on a cost code by cost code basis. So now, instead of just estimating the entire job, the project manager goes through each cost code, and it probably has a little more accurate information about what they need. So in this case, I have a remaining budget of $33,000 for general requirements. I can just tell based on how much time is left in the job, I have about $15,000 left to go. So that gives me a total amount, and it gives me an estimated improvement of my gross profit. So this is a win for me because I'm going to spend less than I expected of $28,000. And I can walk my way through the rest of these as needed, dealing with each situation as is appropriate for that particular cost code. Once I'm done with that, I have at the end of the day, I have a final estimated cost to complete. Let's just hide anything that we aren't interested in. And, okay. Oops, I didn't hide anything. There we go. And we now know our estimated cost to complete is $16,000. So my total, that's the adjustments I made, my total is $509,925. So that is the number that I can then drop into my WIP analysis or my over-under billing analysis. Now, this program, similar to the WIP, allows me to export to a whole bunch of different types of templates. I'm not going to take the time to do that, but I will just kind of show you a couple of things that we've done with this to give you a sense of how robust this can be. Here is another export, another template, but this has additional information, and in addition to that, it has a cost to complete by cost type. Or we might do something that is much more complex, where if there was some sort of logic that's applied on a standard basis, this is a much more much more detailed analysis that includes every subcontractor by cost type and cost code, and it automatically applies logic to figure out what the permanent variance is or the variance on the job to complete each cost code cost type is. And that saves a lot of time, because there's a lot of things you look at and you say, well, if I haven't paid this, if I'm not going to pay the subcontractor anymore, then I can set my cost to complete to 0, and all that's automated, and then they can go through and make final adjustments. So obviously this is something that would be very specific to someone's process. Now that's the easy way, exporting to Excel, but there's another way where we add another dimension to this, which is a little richer, and that is, instead of using Excel, we put it in a database. We put all those projections that you're doing in a database and allow the project manager to edit those directly from this application instead of generating Excel spreadsheets, sending them out, bringing them back. So I'm going to load, instead of exporting Excel, I'll load my projections, and you'll see we have a lot of information here. So for every cost type, those are our rows, we have key information about every cost code. So this is reflecting cost code 1000, my general requirements, and I can see I have a budget for labor. The only thing I have is a budget for labor for general requirements of 69,000. There's been no change orders on that, but it does look like I added a change order to the subcontracting. My committed costs, so this will indicate any open purchase orders or subcontracts. So in this case, I can see I had a subcontract, it's $3,000, but I had to actually buy it out at $8,000. Has my month, my cost in that month, my cost on that job to date, and my remaining budget. And then this allows me to project each one of those situations. So if I go through and I can say on my labor, okay, I've spent $17,000 so far. So let me edit my projections. I'm going to, instead of spending $52,000, I'll spend $50,000 to finish that up over the job. That's going to give me a little bit of a gain on the job overall of $2,717. Once I'm done with that, I save it, save my projections, and I can preview a report that gives me all that information in detail about my projections to date, and what my final projected cost to complete is going to be on that job, and my final profitability. Now, here's where the magic comes into play. The next month, because I'm working out of a database, I can go select my next month. I'm going to load my projections. And this time we're going to just look again, we're on cost code 1000, which is our general requirements. If you recall, we estimated $50,000 to complete, but in the next month we spent $6,500. So now my projection is $43,500. So if nothing changed, this projection is automatically aged to accommodate that situation of what we spent to date. So I don't have to rethink it every time. I don't have the variability of our clients, of our project managers going in and making decisions that would affect this up or down without having some sort of logic or rationale behind it. And then I can go ahead and edit things. So in this particular one, I might say, oh, you know what, I'm going to have to buy $500 worth of material. And I know that I'm going to have to spend $8,000 on this particular subcontract, so we're going to be $5,000 over budget, etc. Save that, save it again, print it, and we have a very accurate cost to complete analysis, which can be updated very easily the next month in a fraction of the time, and it'll be way more consistent. So that's our cost to complete model to help us manage the information coming from the jobs as compared to what's in our transactional database of Sage. Okay, so now the last piece of the puzzle, the last application that we sometimes look at that's very useful for a lot of people is in our indirect allocation program. So what the indirect allocation program does is it says, okay, I have costs that I can't really charge to a job. I directly, it's just too hard. I might have a superintendent. I might want to charge my estimating labor down to the jobs. I might have cell phones that I'm not going to break that out by job by hand. It would just take me too long. But the problem is that can be substantial. In my experience, the indirect costs that are charged to overhead accounts but really belong in the jobs can be anywhere between 2 and 10%. So we want to know about that to have accurate numbers. So a really easy way to do it is with some sort of allocation of those overhead costs into the jobs. Now it can be done with a spreadsheet, and you can pull all the reports you need and calculate it and things like that. So this is intended to make that process quicker, so it can be done on a monthly basis, and some people actually do it on a weekly basis. So to do this, I'm going to just say, how do I want to allocate? I can allocate by cost, by hours, by revenue. Well, we're just going to allocate by cost. I pick the period I want to work with. Just click next. I can filter this and say, just show me, I only want to allocate across certain types of jobs or certain supervisors. You can get very refined allocations based on that information. I won't go into that right now, so it'll be on the scope. Now I'm looking at my shop expenses, and I can choose to allocate shop expenses that might belong as direct costs to the jobs. I'm not going to bother with that this time around. Now we'll look at our overhead, where most of the action generally takes place. And in this case, I can see I'm going to allocate the cell phone and paging. So if I unclick that, it reduces the amount I'm going to allocate. If I click it, it's going to increase it, obviously. Travel and meals, we'll allocate that to our jobs because that's mostly our supers spending on their credit card. We like to put our estimating labor against it, so we've done that. And then I indicate all the places that where I want to post this information when I actually create job costs, because this is going to create a job cost in each job, and I want to get that right. So I'm going to have a target cost code. I'm going to have what type of cost I want to call it, and where I want to offset it. So let's just do that. Fine. It's going to look at the administrative records as well. And we will move on to the next one. I don't know why that's, hide that for a second. There we go. Okay. Then when I get to this final screen, I can see all the allocations that I have. So the allocations that I've got are by default, I'm taking 16%. So this job represents $82,000 out of a total of $497,000 worth of costs I had. So it represents 16.5% of the job cost experienced in that period. So I'm going to allocate 16% of the $3,000 I want to push to the jobs to that job. That's $576. And it does this for all the jobs very quickly. And I also have the option to reset some of these. So I can say, no, I'm not going to do any allocations to these two jobs. They're over. I don't want to assign any more cost to them. Whatever reason I have, I can do that. I'm going to recalculate this. It retains the logic of allocating exactly $3,478, but it allocates it across the jobs relative to the adjustments I made. And then I just go ahead and run it. And just like the over-under billing program, it creates a journal transaction that we can then go review and post. So let's go do that, because we're done at this point creating all our allocations for that period. Okay, so let's go look at Sage. Let's go to our recurring journal transactions. And we'll go to the last one. And here's our indirect cost for period 6. It tells me to post it to period 6, which I've got here. Gives me my indirects, which is going to be, and then my offset against my overheads. And now here, it creates a job cost record for each and every job that I want to do the allocations to. All I've got to do is say, I like this, save it, recall it, and post it. It's warning me I don't have budget amounts for that. That's fine. And we are done. So that is the end of the quickies, the quickie demos, all 4 applications.